Let's get into your market news now. Asian markets were mixed on Wednesday, but the euro staged a mild recovery on hopes that Italy and the European Union can ease a row that has fueled fears of another crisis in the eurozone. While the China-US trade spat simmers, of course, the source of angst amongst dealers has moved to Rome after the populist government passed a purse-bursting budget last week that drew a rebuke from Brussels and warnings to abide by EU rules on public spending. Asian markets slumped, however, at close. As you can see there, the Nikkei down to 24,110 points. The Hang Seng at 27,091. The Shanghai Composite still closed for that public holiday. Wall Street did advance, however, the Dow Jones Industrial closing at record highs for a second day after economic data boosted treasury yields and set financial stocks higher. Pressures from Italy have taken the cloud off the global trade story, while financial stocks finally responded to the rise in interest rates in the United States. If you take a look at the Dow Jones Industrial, it did rise around 0.2% to just above 26,829 points. The S&P 500 inching higher as well. It is currently sitting at 2,925. The Nasdaq Composite at 8,025 points. Bit of negativity coming through from the market for the longest time now, especially locally. If you take a look at the JSE, it has faltered and is still sitting in negative territory, around 2/3% down at present. South Africa's currency even blowing out all the way to around 14 Rand and 70 cents against the US dollar. At present, it sits at 14.72. So we'll unpack exactly what's moving that market and the remainder of the global sphere as well. With that, here's your European and local markets. Well, let's unpack the markets now. Anton van Niekerk from NEF here joins us now as we unpack that market movement. Anton, thank you so much for joining us this afternoon. A whole lot of negativity in the markets. The general sphere just seems to be headed in a downward trajectory. We're down for the year as well. Where's this negativity coming from?
Well, I think it's probably coming from the oil price at a very high level at the moment at $85 a barrel. And I think it's due to emerging markets. Emerging markets, it's not going well there because we've seen Italy coming out with deficit numbers of 2.4% of GDP, and generally not good sentiment.
Yeah, the rand as well continues to blow out. Is that really a function of that oil price which has blown beyond $85 a barrel, or is it a function of things happening locally? Are consumers or investors fearful of what might happen out of the job summit? Are any of those issues perhaps coming to play here?
Well, I don't think it's all local problems. I think it's mostly global problems, especially emerging markets. With the Chinese trade war with the US, we've seen the United States putting up sanctions against Iran. We've seen the Turkey coming out with inflation figures of 24%. We've seen the Argentinian peso declining more than 50% this year. I can keep on naming things that's going on in emerging markets. It's not necessarily going on in South Africa, but we're feeling the effects, and that's why the rand's been plummeting.
Yeah. For the longest time, emerging markets were seen as the place to be in.
Yes.
Do we still remain attractive in some sense, having seen us fall off so much now?
Yes, I think so. For us, we love emerging markets. The thing is, I think global investors are still scared about going into emerging markets, and I think it's mostly due to higher interest rates globally. So they see interest rates going up globally, and that means each and every country has to put up interest rates to compete with the dollar and to keep their currency stable.
Your biggest news point as well then from the equity market, have you seen anything sort of coming out? I mean, not really the biggest news this week as well when it comes to company news.
No, news has been quiet, but let me tell you about this fact. More than 36% of companies on the JSE has gone down more than 50% for the year.
Sure.
So that's just telling about how difficult the market has been. We've seen year-to-date returns on the all share go down 3.8%. We've seen the only star performer is the resource index going up 24%. We've seen financials going down 3.8 as well.
Yeah.
We've seen industrials go down 11.2%, and property index has been blown out by about 22% this year.
You would have been better holding onto your cash then.
Yes, so we've seen bond returns going up 4.8%, and then cash doing about 6.5 to 7%.
Sure. It really is a scary market then. Does it maintain then that attractiveness for value investors who will look beyond this year? I mean, it's been a bad, probably 2 years at the very least.
Yes.
Do you think for value investors who will look beyond just the 1 or 2 years, there is still good prospects in the market?
Yes, so we've been in a massive downturn in South Africa. We've been in the longest business cycle downturn in 73 years.
Yeah.
So, and in the last 3 years, we've seen companies, not only the top 40 companies, I'm talking about the smaller companies, turning down quite badly. So it creates an opportunity for us as value investors to pick off those companies and make good returns. I think people forget sometimes that there isn't only top 40 companies to invest in.
Yeah.
There's a much larger range of companies to invest in with much better financials, and that could benefit from the whole Ramaphosa thing.
Yes.
There's a lot of things that can go quite well.
Yeah, and as you say, people generally have that narrowed view when it comes to markets and just think we have to invest in those blue chip stocks. But if you were to look into the medium to small stocks, I mean, it becomes very difficult because data might be scarce, etc. What do you suggest to be the right move to make when heading into those medium to small stocks?
I think if you take caution, if you look at free cash flows of the company, look at debt levels of those companies, make sure that they're sound businesses with good competitive advantages. If you do that and you look at those type of companies, you'll come out better. Don't look at the small guys. Keep liquidity in mind. Keep in mind what's going to happen in the next 10 years in South Africa, and then choose those companies wisely. Yeah,
the big focal point for the week will probably only come tomorrow. It's those jobs numbers out of the United States. That is likely to move the market in a particular way. What are your thoughts on what could be coming out there?
Well, I think good figures will be coming out. We've seen some of the Federal Reserve participants saying that they're going to push up rates quite substantially. They don't care about growth in the US. They say they'll do 4 hikes in the next year and then 1 more in December. So I think it will be good figures if we look at what they're saying and what they're indicating.
Fairly aggressive moves there from the Fed indeed. So it will be quite interesting to see how those jobs numbers come out of the United States as well tomorrow. We'll unpack those and hopefully I'll get them to you as well. Comes out around 2 o'clock or so. Well, that is where the buck stops on the financial news front and the markets front. We'll unpack the rest of that jobs economy and of course that job summit coming out of Midrand with Nzinga right after this.